Alright, ladies and gentlemen, welcome back. And in this video, I'm going to talk about the trade bracket strategy. Okay, so I'm going to explain in detail how you can actually execute or trade the trade bracket strategy successfully. Okay, so pay very close attention. Alright, so the very first thing I'm going to talk about is the steps of the strategy. Okay, so the first step is you need to start on a higher time frame like the 4-hour or the daily time frame to identify the directional bias. Okay, that's the reason why we start on a higher time frame, because we want to identify the directional bias. All right, so step 2, you need to look for a break of a high or low still on a higher time frame. So we look for the break of a high or low on a higher time frame. All right, then step 3, okay, when we get the break of a high or low, okay, we go to a lower time frame, okay, like the 15-minute, and we shall be using the 15-minute. All right, and then mark the market structure as price is pulling back. Okay, and the market structure we shall be marking will be the higher lows and lower highs. So these are the only market structures that we shall be marking. Okay, we shall be marking the higher lows and lower highs. All right, step 4, we wait for a break of these market structures that we just marked on a lower time frame. Okay, we shall wait for a break. We shall wait for a break of the market structure that we just marked, which are the higher lows or lower highs. All right. Then lastly, step 5, we shall draw a trade bracket. Okay, and wait for price to get back to the trade bracket and execute a trade. All right, so those are the 5 steps that you need to follow to trade this strategy successfully. All right, so let's move on now. Let's talk about the most efficient way that you can actually trade this strategy. All right, so the first one is you will use alerts, okay, to be notified when price breaks structure. Okay, and what structure are we talking about? The higher lows and lower highs. Okay, and the reason why we want to use alerts is because we don't want to be sitting on our charts the whole day just to wait for this structure to form, guys. Okay, that's the reason why we shall use alerts. Okay, and I'll show you later when I go to the charts. Okay, I'll show you how you can add these alerts to get notified, because like I said, the biggest reason people join trading or join forex trading is to get the freedom back, is to get the time back. Okay, we don't want to be sitting on our charts, because this structure right here, like I said, it can take a whole day to form. So you don't want to be sitting on your charts just to wait for these structures to form. All right, so you want to do it efficiently. Just set an alert, and then when price reaches that alert point that you set, you will be notified. All right, because again, I don't want to be sitting, this is not a 9 to 5. Okay, I don't want to be sitting on my chart the whole day just to wait for price to break structure. No, okay, that's not the best way to do it. All right, so another efficient way that you will use is using pending orders, okay, to execute a trade automatically. So same thing, pending orders, you just set a pending order on your chart. Okay, so when price reaches that point, your trade will be executed automatically. Okay, so you don't want to be on your charts waiting to execute the trade. Okay, I don't want to be sitting on my PC or my phone waiting the whole day. No. All right, so just set a pending order and wait for price. When price reaches that point, your trade will be executed automatically. All right, so now let's talk about the rules of the strategy, guys, and this is where you need to pay very, very, very close attention. Okay, you need to pay too much attention when it comes to the rules, because you need to follow these rules. If you miss out anything, the strategy will not work. All right. All right, so rule number one, you need to follow all the steps of the strategy. Remember the 5 steps I talked about on the very first slide? Yes, you need to follow all the steps of this strategy. All right? Then rule number two, you need to ensure proper risk management. Okay? Risk 1% or less of your account, guys. Okay, risk management is key when it comes to trading. All right, and most people, if you gamble around this, and trust me, if you gamble around risk management, you won't be here for long. Okay, you will not survive in forex trading or any other financial markets for long. Okay, because you need to guard your capital, guys. Okay, you need to guard your account. All right, and the best way to do it is applying risk management. Okay, so you can apply a 1% risk management rule, or even less. All right, so next let's talk about the other rule is only take trades that are at least 1 to 2 risk to reward ratio. Okay, so what a 1 to 2 risk to reward ratio means, if I risk, let's say, $10, okay, I'm expecting to get in return $20. If I risk 30, if I risk $30, I'm expecting to get $60 in return. All right, that's what a 1 to 2 risk to reward ratio means. Okay, so if you get a trade, like it says, at least. Okay, so if you get anything less than a 1 to 2, do not take that trade. Okay, do not take that trade. Just forget about that setup and wait for another setup, guys. Even if you get a 1 to 1.99, don't take that trade, guys. Okay, discipline in trading and following your trading plan is key when it comes to trading. So you need to be very, very disciplined and patient. Okay, patience and discipline are one of the key tools you need in trading. All right, so you only take a trade that is at least a 1 to 2. So if it's a 1 to 3, it's okay. 1 to 4 is okay. 1 to 5 and so on is okay, but at least a 1 to 2. All right. All right, so another thing is only execute when price gets back to the trade bracket. So if price doesn't come back to our trade bracket, we are not interested in taking that trade. Okay, we are not. Just forget about that setup and wait for another setup. All right. All right, so next let's talk about how price moves. Okay, or market structure. All right, now you need to pay very much attention at this point, guys. Okay, because market structure, okay, is one of the most important topics when it comes to forex trading. Okay, and the reason why market structure is one of the most important topics in trading is because we as retail traders, okay, retail traders like you and me, we do not move the market. Okay, so what that means is we just follow the market. So we wait for the market to do wait for an action from the market, then we react. Okay, so we just following the market. Okay, if the market is buying, we want to be buying as well. If the market is selling, we want to be selling as well. By buying, I mean if the market is going up, we want to be buying. If the market is going down, which will mean the market is selling, we want to be looking for sells. Okay, you don't want to be buying when the market is selling, guys. Okay, you will lose. Okay, that's the simple truth. Okay, so market structure, okay, is very, very essential, because it will impact, understanding market structure will impact your results when it comes to trading forex. Okay, so if you understand market structure, and I'm gonna go about it very, very slowly so that you can really understand it. Okay, all right, so now let's get straight to it now. So market can move in three ways. All right, so market can move in an uptrend. Okay, market can move in a downtrend. Okay, or market can be in a consolidation. All right, so let's start with an uptrend. Okay, so if they say the market is in an uptrend, what that means is this is when price is moving up, okay, or buying, or the price or the trend is a bullish trend. Okay, that's what that means. Okay, then downtrend means, okay, price is moving down or selling or is in a bearish trend. All right, then lastly, the consolidation. Okay, this means price is neither moving up or down. Okay, so these are the three different ways price moves. Okay, price can be in an uptrend, a downtrend, or it could be in a consolidation. Okay, all right, so now before we move to the next slide, there's some abbreviations that I want you to understand and remember. Okay, so whenever you see the abbreviation HH, that stands for higher highs. Okay, and whenever you see HL, that stands for higher lows. Okay, whenever you see LH, okay, right here, okay, that means lower highs. Okay, and whenever you see LL, okay, that stands for lower lows. So memorize these abbreviations because I'm going to be using them throughout from now on in the presentation. Okay, all right, so now still on how price moves and market structure. Okay, so now let's talk about the uptrend now. Okay, what really happens in the uptrend. All right, but before I show you the example or the illustration, there's some terms that I'm going to be using. Okay, I'm going to use terms like push, pullback, push, pullback. Okay, I'm also going to be using terms like impulsive move, retracement, impulsive move, retracement. Okay, you got that? All right, so now let's look at an example of an uptrend. Okay, so remember we say if price is in an uptrend, what that means is, okay, price is buying or moving up or it's in a bullish trend. So that means price right now, this example right here shows price is buying, is going up. Okay, so now let's say price was down here. Okay, if it's moving up, and this is how price moves, guys, you need to pay really, really, close attention to what I'm going to tell you. Okay, because understanding this, like I said, will improve your results when it comes to trading significantly, guys. This will impact your results positively. All right, so if price is in an uptrend, let's say it was right here. Okay, it will make a push. If it's in an uptrend, push, pull back, push, pull back, or impulsive move, retracement, impulsive move, retracement, impulsive move, and so on and so on and so on. All right, now as it's making this push and pull back, push and pull back, it's also doing or creating 3 points in that market. Okay, or in that uptrend. Okay, it's creating higher lows, higher highs, and break of higher highs. As you can see right there, it says break. Okay, so these are the 3 things price will do if it's in an uptrend. Okay, so these are the things that will actually confirm to us that it is an uptrend, it will be creating higher lows, higher highs, and break of a higher high. Okay, that's the last confirmations of the three things I just talked about, right? Now the only time you mark these points, okay, is when it makes that last the break. Okay, so the only time I'll mark my points, the only time I'll mark this as a higher low and higher high is when it finishes that break. So if it does not break, I will not mark these points. Okay, so the break now confirms the marking of the points. All right, so like I said, let me repeat myself. Okay, if price is going up, if price is in an uptrend, okay, it will be pushing up. Let me actually delete this, it's getting a bit untidy. Let me delete most of the things. Delete this, hold on. All right, that would be good. Let me get my pen back. All right, so I got my pen back. So if price is in an uptrend, we say it will be making the push, pull back, push, pull back, or impulsive move, retracement, impulsive move, retracement. Okay, and as it's doing that, okay, it will be creating other 3 points, which are higher low, higher high, and break of a higher high. And only when it breaks that higher high is when we mark these points. All right, so now let's move on to the downtrend now. Okay, so if price is in a downtrend, what that means is price is moving down, or it's selling, or it's in a bearish trend. All right, so same thing. Okay, if price, let's say, was here, okay, it will be making the push, pull back, push, pull back, or impulsive move, retracement, impulsive move, retracement, impulsive move, and so on and so on. All right, and as it's doing that for a downtrend, it will be creating 3 points, which are lower high, lower low, which is this point right here, lower low, and break of a lower low. And not until it breaks that lower low, if it doesn't break the lower lows, we only mark these points when it breaks the lower low. Okay, so if it doesn't break the lower low, we don't mark these points of the lower high and lower low. We don't. Okay, so the last action that price does, which is the break, if it breaks, then we do the markings now. Okay, we shall do the marking of the lower high and lower low, and so on and so on. Okay, so another thing I want to let me get my eraser so I can erase this. I think I want, because you may come across this term as well when you're trading. Okay, let me get my pen. So these right here are also called swing points. Okay, these right here are also called swing points. Same thing with the buy. Okay, these right here are also called swing points. Okay, so for a buy, this right here will be our swing low, and this will be our swing high. This will be a swing low, swing high. Okay, swing low, swing high. Same thing for the downtrend. This will be our swing high, swing low, swing high, swing low, and so on and so on. Okay, that's the term I just wanted to make sure you also get familiar to. Okay, they're also called swing points. Okay, all right, so now let's move to the last move, which is the consolidation. Okay, so, and as you can see with the consolidation, price is not breaking. This is when price is not breaking any low or any high. Okay, so price is just pushing up. Okay, so it will be making a push, pull back. Okay, so we expect it to push and break this high, but it does not. Instead, it just reaches this point and retraces back. Okay, so it's just making those push and pull back, but it's in one place. Okay, it's not breaking any high, guys. It's just consolidating in one place, in one area. Okay, it's not breaking any highs or lows, and it's advisable in times of consolidation that you don't take any trade. Okay, so when price is consolidating, don't take any trade. Just stay away from the charts. Okay, it's not a perfect time for you to trade. All right, just stay away and avoid the chart or the market. All right. All right, so now let's talk about changing direction. Okay, so price will not move in one direction forever. Okay, it will reach a certain point and change direction. That is why I said, guys, it is very important for you to know market structure, because let's say if price was buying and price changes direction, okay, to the downtrend, or price changes directions to, it changes its direction to sell. So we want to be looking for sales, guys. Okay, like I said, wait for price to do, we're following price. Okay, wait for price to do an action, then we react. We are following price. We as traders, retail traders, we follow price. So you want to know when price actually changes direction, so that you also change your bias. It is very, very important, guys. Okay, all right, so now let's talk about the uptrend. Okay, so like I said, I explained this in the last slides. Okay, so I said when price is in an uptrend, let's say price was right here. Okay, it will be making a push, pull back, push, pull back, or impulsive move, retracement, impulsive move, retracement, and so on and so on. Okay, and as it's doing that, it will be creating our 3 points. Remember, we talked about when it's in an uptrend, it will be making higher lows, higher highs, and break of the higher high. Same thing, even up to this at this point, it will be making higher low. It will be pulling back, then pushing. Okay, so this will be pull back and push, or retracement, then impulsive move. But as it's doing that, as soon as it breaks this higher high, okay, as soon as it gets the break, all right, then we shall mark a higher low, higher high, and this right here will be our break. All right, so price will keep doing this. Let me get the eraser, because it's getting a bit untidy. This area right here is getting a bit untidy. Getting a bit untidy. Let me erase that. That will do. Let me get the pen. All right, so push, pull back, push, pull back, push, pull back. Okay, or impulsive move, retracement. Okay, same thing. It's just change the terms. Okay, the terminology, but it's the same thing, right? So pull back, then push to the upside now. Okay, so what do we expect price, because it's in an uptrend, so we expect price to pull back and continue to the upside. Okay, but instead what it does, it comes all the way down and breaks this last higher low. Okay, so that's it. That is our first confirmation that price wants to change direction. So as soon as it pulls back all the way and breaks this last higher low, guys, okay, that is indication that price wants to change direction. But we have to wait for the second confirmation, and the second because price can pull all the way down here, okay, grab liquidity, and then continue all the way up. All right, so you have to wait for the next confirmation. So let me erase this, because I don't want to confuse you guys. All right, so let me get my pen. All right, so now first confirmation, like I said, it pulled back and broke this last higher low. Okay, so we're still waiting for the second confirmation. So price pushes, okay, up to this point, okay, then sellers come into the market, okay, and instead of breaking this higher high, what do? Sellers come into the market and break this lower low. Okay, so now that means price now has changed direction. So your buyers should also change from buying to looking for sales, guys, because now price is moving down. Okay, I hope you got that, okay? And what do we say about if it's selling or going down or in a bearish trend? It will be making, so right here it would have broken this lower low, so it will pull back once again to make this lower high, then push again to make the lower low, then pull back again to make the lower high, then push again. All right, and so on and so on. So it's very vital for you to understand market structure. I can't stress this enough, guys. Okay, you need to know market structure for you to be able to trade. All right, to be able to trade successfully. All right, so let's look at the downtrend example. All right, so for a downtrend example, okay, let's say price was right here. Okay, it's making impulsive move, retracement, impulsive move, retracement, impulsive move or push, pull back, push. Okay, and as it's doing that, it's making our points that we talked about: lower high, lower low, break, lower high, lower low, break, lower high, lower low, break. Okay, so we expect price now, we expect price now to pull back, okay, and push down, okay, but it does not do that. Instead, it pulls back to the point that it breaks the last lower high. So now that's our first confirmation. So as soon as we get this break, so now we, eyes are glued to the chart now. Okay, price now could be changing direction, but we need to wait for the second confirmation. Okay, and the second confirmation, as you can see, price pulled back, broke that lower high. Okay, it pulled back all the way up here. Okay, and try to push again. Okay, so sellers came into the market and pushed the market all the way down here. Okay, but they failed. They didn't break this low. Okay, instead, buyers now came back and pushed the market up to break that higher high. So now that confirms that price now has changed direction. Okay, so same thing. Okay, so it will pull back, then push. Okay, pull back, then push. And as it's doing that to the upside, what is it doing? 3 points. Okay, higher low, higher high, and break of higher high, and so on and so on. Higher low, higher high, break, higher low, higher high, break, and so on and so on until it also changes direction. So guys, you need to understand that. Okay, if you understand that, guys, okay, trust me, guys, you will be a better trader. All right. All right, so let's talk about how you can actually execute or take trades using the trade bracket strategy. And I'm going to show you how you can take your buy and sell trades, okay? And we're going to begin with the buy setup. So the buy setup, what I mean by that, this will show you how you will take your buy trades, okay? But before we go on, there's something I want to bring to your attention, okay? There's something known as fractal, okay? Fractal, okay? And price is fractal. What that means is whatever happens on a lower time frame will happen on a higher time frame, okay? Now remember, when we were talking about, let's say, an uptrend, okay, price will be pushing up, pulling back, push, pull back, push, pull back, or impulsive move, retracement, impulsive move, retracement, and so on and so on. As it's going up, okay, because this right here is this right here describes an uptrend, okay. As it's going up, okay, it will be creating the points we talked about, okay, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, and so on and so on, okay. This is how price moves when it's in an uptrend. So back to the fractal aspect I was trying to explain, okay. If it's in an uptrend on a daily time frame, okay, this is how it will move, okay. If you go down on a 1 minute and price was still in an uptrend, these are the same moves it will be making. It doesn't matter what time frame you're watching price in. If it's in an uptrend, it will be making the same moves, because that's how price moves. All right, so you need to understand that, okay. All right, so now let's look at the illustration, and then I explain how you can actually take your buy trades, okay. Remember, step one, we say you start on a higher time frame. Okay, the reason why we start on a higher time frame is because we want to know the directional bias of the market. Okay, and we talked about the 4 hour, the daily, monthly time frame, weekly, and so on and so on. But remember, the higher the time frame you go to, okay, the more time you will have to wait for these setups to form. Okay, so the 4 hour time frame is perfectly fine to begin with. All right, so now if we're looking for a buy trade, okay, we have to make sure price is in an uptrend. That's the very first thing. Okay, because remember, like I said, we want to trade with the market. Okay, we want to wait for the market to do something so that we react. Okay, if the market is buying, I don't expect you to be selling. Okay, you will lose. All right, if the market is buying, okay, and the characteristics to show that the market is buying, we also want to be buying. All right, so let's say price was here. Okay, for me to confirm that this is an uptrend, or this price action actually is buying right now, price has to be pushing up, pull back, push, then break that, so this right here will be a higher high. So push, pull back, push, then break that higher high. So as soon as you get the break, remember, we mark our points. This right here will be our higher low. This right here will be our higher high. Okay, I hope you recall that. Okay, so again, so price now keeps pushing up. Okay, remember, we're watching this chart in the 4 hour, right? It's very important. We're still in the 4 hour. I want your brain just to internalize this as you're watching it in the 4 hour. I'll explain this later. All right, so price again, like I said, from this point, price pushed and broke that higher high. So price, what will be the next move? Price will pull back. Okay, and what after pulling back, what will be this the next move price does? It will push up. Okay, that is how price moves if it's in an uptrend. You need to understand that. Okay, so we want to be buying. All right, so step one of the strategy we talked about. Okay, we want to start on a higher time frame and get a break. Okay, get a break of a low or a high on a higher time frame, which we got right here. Okay, then as soon as we get the break, we go down now to a lower time frame. Okay, but I want you to remember that this right here is a pullback on the 4 hour. Okay, and this right here is the push or the impulsive move on the 4 hour. You need to remember that. Okay, all right, so let me get my eraser so that I clear my chart. It's getting untidy. All right, so let me clean up. Okay, let me get my pen back. All right, so got my pen back. So as soon as we get the break on a higher time frame, okay, the next step will be we go on a lower time frame, guys. Okay, and the lower time frame we talked about was the 15-minute time frame. Okay, and we want to mark this pullback on this 4 hour pullback, but we'll be watching it this time in the 15-minute. And this is where, when I talked about fractal, this now will make sense. Okay, as price is pulling back, price will be in a downtrend. And what did we say? If price is moving in a downtrend, what will be the characteristics? Price will push, pull back, push, pull back, push, pull back, push, or impulsive move, retracement, impulsive move, retracement, and so on and so on. Okay, what I don't want you to lose focus on, that this right here, this pullback right here, is the 4 hour pullback. But since we went down the 15-minute time frame, okay, we will be able to see these moves because it's pulling back. Okay, remember that, it's very important. Okay, and that's the reason why we go to the 15-minute. Okay, the reason why we go to the 15-minute is for us to be able to execute the trades. We can't execute the trades on the 4 hours. Okay, we can't be watching the direction or the direction bias on the 4 hour and also executing on the 4 hour. No, okay. We want to get the directional bias on the higher time frame, which is the 4 hour, then go down on the lower time frame, like the 15-minute, for us to be able to enter this trade, for us to be able to execute this trade. All right. So this right here, this pullback right here, this 4 hour pullback, okay, we'll be watching it on the 15-minute time frame, okay. And like I said, price is fractal. Since price is moving down, so right now we're on the 15-minute, price will be pulling back, okay. It will still move the same way it does move if it's in a downtrend. That means it will be creating lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Now guys, remember, this is not a bearish market, or this is just a pullback on the 4 hour, okay. And that's how price moves. I don't want you, because our direction is still we're still looking for buyers. It's still a bullish trend, okay. It's still a buying market, but since it pulled back, okay, it will make those moves of a downtrend, because that's how price moves, okay guys. Just understand that, okay. If you can understand that, you will execute this strategy perfectly. All right. So let me get my I want to clean, because I don't want these markings to keep confusing you. So let me clear the chart. Let me clear the illustration, okay. All right, so now let me get the pen. All right, like I said, this pullback right here is a 4 hour pullback, but since we're on the 15-minute, okay, it will be characterized, because it's going down, okay, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so on, okay. But when as soon as we get the break on the higher time frame, we want to go to the 15-minute and mark our structure points. Remember that, okay. And the only points we're going to be marking are the lower high points, okay. We shall only mark the lower high points. So we shall mark this point, mark this point, mark this point, and mark this point, okay. And wait for price to break the last lower high to be made, okay. The last lower high to be made, we shall wait for price, okay. As soon as price pulls back and breaks that last lower high to be made, okay, then we draw our trade bracket, okay. That's the next step. We draw a trade bracket and wait for price to pull back, okay, and take the trade and hold it until it takes out the highest point price started before it pulled back, okay. So this will be the highest point, or other words, this will be our take profit, okay. This is where we shall exit the trade. We shall exit the trade from here, okay. This will be our exit, okay. This will be our exit, guys, okay. I hope you understood that. Now let me explain another thing about the trade bracket, okay. So the trade bracket gives you two things, okay. The trade bracket will give you your entry point, because this is where we're entering our trades, okay, and it will also give you your stop loss point, okay. Now let me clear this slide so that I explain something, because there are two ways you can actually draw your trade bracket. All right, let me get my pen again. All right, so got the pen. You could draw your trade bracket from the point, okay, from the last lower high to be broken to the last lower low to be made, okay. This is not a lower low, okay. And the reason why this is not a lower low, because for this to have qualified to be a lower low, price should have pulled back, then broke it, okay. Because if it had broken it, then this will qualify, but remember, it did not, okay. So this does not qualify to be a lower low. All right, so now you could draw your trade bracket in two ways, okay. You could draw it from the last lower high to be broken to the last lower low to be made, okay. And the last lower low to be made will be your stop loss point, okay. The second way you could draw it, okay, you can draw it from the last lower high to be broken to the last point price reached, okay. And again, this right here will be your stop loss if you took the second way I've just explained. Now, the advantages and disadvantages to both, okay? If you draw your trade bracket from the last lower high to be broken to the last lower low to be made, your risk to reward ratio will be high. And remember, we talked about the risk to reward ratio, and we say your risk to reward ratio, let's say if you risk let's say it was a 1 to 2 risk to reward ratio. What that means is if you risk $20, okay, you will make $40. If you risk $50, you will make $100, okay? So a higher risk to reward, what that means is basically you will make more money, okay? So if you draw your trade bracket from the last lower high to be broken to the last lower low to be made, you will make more money. But the higher chance that price will come, take you out of that trade and continue in your direction, okay, it will be a higher chance, okay? It will be a higher chance that price pulls back, takes you out, and then continues in your direction, okay? Now, if you draw your trade bracket from the last lower high to be broken, okay, to the last point price reached, okay, you will have a less risk to reward ratio, okay? What that means is you will make less money, okay? But the chances of price coming to take you out and continue in your direction, okay, will also be lower. All right, so the advantages and disadvantages to both. So I'll let the choice, I'll let you make the choice, okay? I'll let you make your own choice, okay, when it comes to drawing the trade bracket. But I've told you that advantages and disadvantages to both, okay? All right, so now let me explain the sell setup, and maybe this will all sink in, okay? Like we said, okay, if price is selling or if price is in a downtrend, okay, let's say price was at this point, it will be pushing, making a pullback, push, okay. As soon as you get the break, okay, so that means this will be our lower high, this will be our lower low, okay. So again, so push, pull back, push, pull back, okay. This is how price moves, guys, okay. Now remember, step one, okay, we wanna start on a higher time frame because we want to know the directional bias of the market. So as soon as it gives us these 3 points, as soon as it gives us the lower high and the lower low, okay, and the break, okay, the break is very important because the break is the one that confirms these other points, okay. So as soon as you get the break, now that confirms your directional bias, that confirms actually price is moving down. So what do we do next? We go on a lower time frame, okay. And on a lower time frame, this right here is a pullback on the 4-hour. But since we're watching it on a 15-minute, as it's pulling back, because remember, if price is in an uptrend, it will move the same way. Like I said, we talked about fractal, okay. So if price is pulling back, as it's pulling back, it will be in an uptrend. That doesn't mean that the bias has changed. No, that only means that that's how price moves if it's moving up. But the bias is still, we're still looking for sells. We want to sell, okay. It's still a bearish trend, okay. Don't be confused by that. The fact that, you know, price is pulling back, that this does on the 15-minute on the lower time frame, okay, this doesn't mean that price has changed direction. This just means that, you know, price, that's how price is moving, okay. That's how price moves, okay, if it's in an uptrend, okay. So step one, like I said, start on a high time frame, the 4-hour time frame. As soon as we get the break, that confirms our bias, okay. We want to sell. Then step two, go to a lower time frame, then start drawing our market structure points, okay. So as price is pulling back, the only points, because remember, price will be pulling back, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows on the 15-minute time frame, okay. The only points we shall be focused on, we shall mark the lowest point price, you know, started pulling back. Then we shall also mark the higher lows, only higher lows. So we shall mark this higher low, mark this higher low, mark this higher low, and so on, and wait for price to break the last higher low. Okay, as soon as price breaks the last higher low, we draw our trade bracket. And like as we said, okay, we draw a trade bracket. If price pulls back to the trade bracket, we take that trade and hold that trade until it takes out the lowest point price started to pull back. This right here will be our exit of our trade, or the take profit. All right, now I want to explain again. Okay, the trade bracket gives you two things. Okay, it will give you an entry point, because as soon as price comes back, you're taking that trade. It will also give you your stop loss level, or your stop loss points. Okay, and again, on the sell setup, it's no different. Okay, you could draw your trade bracket from the last higher low to be broken to the last higher high to be made. Like I said, this is not a higher high. For this to have qualified to be a higher high, it should have pulled back, then broken. Okay, should have broken that. Should have made a pullback and break. Okay, if it had pulled back and broke, okay, this would have qualified to be a higher high, but this does not qualify to be a higher high. Okay, all right. So, like I said, we could draw a trade bracket in two ways. We can draw it from the last higher low to be broken to the last higher high to be made. Okay, what that means is our stop loss, okay, will be on this last higher high to be made. Or we can draw it from the last higher low to be broken to the highest point price reached. Okay, so that means this will be our stop loss in that case. But like I say, the disadvantages and advantages to both. Okay, what if you draw it from the last higher low to be broken, the last higher high to be made, you will have a higher risk to reward ratio. What that means is you will make more money, but the chances of price actually pulling back and taking you out and continuing in your direction will also be high. Okay, if you choose to draw your trade bracket from the last higher low to be broken to the last point price reached, the highest point price reached, okay, you will have a less risk to reward ratio. What that means is you will make less money, but the chances of price actually pulling back all the way here and taking you out and then continuing in your direction will also be low. All right, okay, so let's talk about how you can take your trades efficiently. Remember, we said you can use alerts and pending orders to trade this strategy more efficiently, and the reason for that is because this pullback right here, okay, this pullback can take a whole day or even more to form. Okay, so you don't want to be sitting on your computer or on your phone waiting the whole day for price just to pull back and then you execute. Okay, the best way to do it is by using alerts and pending orders. Okay, because remember, the reason why most people join trading is because they want that freedom back, they want that time back. Okay, you don't need to treat trading like a 9-to-5 job. All right, so now let's say, and this is a decision you can make. All right, so you could choose to check your chart, okay, after a time interval. Okay, so you could choose to check your chart after every 3 hours or 4 hours or 5 hours. Okay, any time interval that you choose. Okay, for this example, let's say I chose 3 hours. Okay, so let's say after every 3 hours I want to be checking my chart, because like I said, at least it's better than you sitting there for the whole day just watching the charts. Okay, so you could check your chart after a time interval, and for this example I'm going to use 3 hours. Okay, it's just an example. You could go ahead and choose any time interval that you want. Okay, all right, so we all know the strategy by now. So let's say price was here, okay, made a push, pull back, push, so we got a break on a higher time frame. So now this gives us our directional bias. So we go now to the 15-minute, okay, and this pullback right here is what we are looking for, okay. So let's say after 3 hours, okay, you check your charts, okay, and then price was right here, okay. We're just assuming, okay, let's say after 3 hours you check your charts and price was right here, okay. You will go ahead and mark the market structure that has been formed until this point, okay. So you will mark this as our high, all right. You will mark this as a lower high, okay. You will mark this as a lower high, okay. This right here won't be a lower high yet because price hasn't broken this lower low, okay. So you will mark it up to this point, okay. This right here will be our last lower high to be formed, okay. And for whatever interval that you check, the last lower high, okay, is where you will place your alert, okay. This is where you will place your alert, okay, so far, okay. So you will place your alert right here and then wait for price, because I'll show you later on the charts how you can actually go and customize it, okay. You can customize your alert to receive a notification through email, or they can send it directly to your phone. I'll show you later when we go on the charts, okay. So remember, after 3 hours we checked our chart, price was right here, okay, and this was the last lower high to be formed, okay. So we place our alert up here and we wait for price. If price rises and hits this line, okay, our alert will be triggered and you will receive a notification, okay. Now let's say price didn't rise all the way there, okay, and then it continued down now, okay. So it's making lower highs, lower lows, lower highs, lower lows, okay. So you set your alert, then close your laptop or put away your phone, okay. So you check your charts once again after 3 hours, okay, and price was right here, okay. So if it's right here and it didn't trigger your previous alert, so you go ahead and delete this alert, okay, and then mark your last lower high. So this will be our new alert after 3 hours, guys, okay. So we put our alert right here, all right, and then wait and then put away our phone or just go ahead and close our laptop, okay, because you will receive a notification, okay. So let's say price now rises and hits your alert line that you set, okay. You will get a notification, and as soon as you get a notification, now you know our strategy is in play, okay. So the next step we shall do is come back to a computer or our phone, whatever device we're using to trade, and then draw our trade bracket, okay. Now whatever way we choose to draw a trade bracket, because remember I talked about 2 ways, okay, but whatever way we choose to draw a trade bracket, okay, the top line, okay, in this case for this buy example, okay, this top line right here, this right here will be where we place our pending order, okay. The reason why we place our pending order, because price would have broken the last lower high where we set our alert. So price, let's say, will be right here, okay. So we'll place our pending order right here, and since this is a buy example, so this will be our buy limit pending order, okay, because we want price to pull back as soon as you won't be. So you place your pending order and close your laptop or put away your phone, okay, and leave everything, okay. So price will pull back as soon as it hits that pending order. Your order will be triggered automatically, so your trade will be automatically placed, okay. So that's what I mean by a more efficient way, okay. So you use pending orders, okay, so that when price hits you use your alert, because when price hits the alert, it will be triggered and they will send you a notification. So you will come back to your chart and then draw your trade bracket, okay. Then after you draw your pending order, or you put your pending order, okay, you place your pending order on the chart, and then wait for price to pull back and hit that pending order. You won't be on your chart, okay? So this right here will be done automatically, okay? All right, so now let's talk about now the sell example, okay? Same thing again. This pullback right here will take a long time to form, okay? And we don't want to be sitting on our charts just to wait for this pullback. So what do? As soon as price pushes, this is a higher time frame, then pulls back, then we get our break, okay? As soon as we get a break on the 4 hour, okay? So we go to the 15-minute, okay? Let's say we checked our charts after 3 hours, okay? And price was right here, okay? So we'll go ahead and mark the structure so far. So we'll mark this low, we'll mark this higher low, we'll mark this higher low, because this will be a last higher low because price is right here, okay? And then place the alert right here, okay? So we close our computer or put away our phone. Then after 3 hours, let's say we came back again and price didn't come and trigger our alert. Instead, it went ahead and made higher lows, higher highs, higher lows, higher highs. And let's say after 3 hours again, we open our charts and price is right here, okay? So we will delete this. So we will delete this as the alert and then place the alert right here, so that if price comes and hits this alert, we will get a notification, okay? And as soon as we get the notifications, we come back. As soon as we get the notification, we come back to charts and draw our trade bracket. So this lower line right here will be where we place our pending order, and this right here will be our sell limit pending order, because when price pulls back, so we draw our trade bracket, then place our pending order, and leave the charts, okay? Go and do something else, okay? Now when price pulls back and hits that pending order, your trade will be placed automatically without you being on the charts, okay? So this is a more efficient way to trade this strategy, okay? By using alerts and pending orders, okay? All right, now let me talk about the trading orders, okay? All right, so we have two categories of trading orders, okay? We have market orders and pending orders, okay? So now let me talk about market orders first, okay? So we have the buy market order, okay, which allows you to buy at best available price, okay? Then sell market order allows you to sell at best available price, okay? And this is, you use it if you want to enter instantly at current market price, okay? So let's say if you're looking at your charts and you wanted to enter the market manually, okay, by yourself, you wanted to press the sell or buy button, okay? So if you press the buy button on your own manually, you've just executed a buy market trade. If you press the sell button by yourself, you've just executed a sell market trade, okay? All right, so let's talk about pending orders, and I will be talking about only four, okay? So the first one we have the buy limit, okay? So this is when you buy below current market price, okay? Then sell limit is when you sell above current market price, all right? Then buy stop is when you buy above current market price, all right? Then sell stop, you sell below current market price, okay? And for this strategy, guys, like I said, we want to use pending orders because we want to execute our trades automatically. We don't want to be on the charts all day, okay? We don't want to be on the charts all day just to for us to execute the market orders. No, okay? We want to do it automatically, okay? So for this for this trading strategy, the trade bracket strategy, okay, we shall be using only these two. And the reason for that, guys, okay, because as you see, it says buy limit, okay, you wait or you buy below current market price. What this actually means is these limit orders, okay, you actually waiting for price to pull back first before it goes in its intended direction. And remember, for our buy setup that I just showed you, okay, as soon as price breaks the last lower high, okay, we wait for price, we draw a trade bracket, then wait for price to pull back in the trade bracket, then execute the trade. same thing but opposite. Okay, for the sell setup, okay, we shall be using sell limits. Okay, because remember, in our sell setup, wait for price to break the last higher low. Okay, then draw our trade bracket, then wait for price to pull back so that we sell in its intended direction. Okay, so we shall be using these two right here. All right, so now as you can see right there, it says this is when you want to enter automatically at certain market price. Okay, all right, so I think I've shared everything I wanted to share in the presentation. So next I'll be seeing you on the chart. Okay, so I will do the demonstration now on the chart so that you get a clear understanding of what I've just said practically. Okay, all right, so thank you all guys for watching, and I'll see you in another one. Bye.